Thanks for tuning in to India Market Close right here on NDTV Profit. And it's been, just pull up the markets, and it's actually been again a day wherein, much like last week, wherein the world markets were off and Indian markets did not fall, only to fall later on. I don't know if this will be the case, but we were talking about this today, that somehow the Nifty PCR and the quant indicators were suggesting that this might not be a bad idea to start accumulating. Now, again, these prophecies may fall flat on their face towards the end of the day, end of the week really, but so far so good. The mid cap and the small cap intraday should come up on your screen if we can very quickly before I talk about the Nifty 50, and then Samina will highlight what's happening at the broader end of the spectrum, of course. This is the mid caps, and they've been quiet, 0.5% lower in fact for the mid cap index. The small cap index 1% lower. So here the music is not being great, but off the lows of the day, which is a good thing. Market breadth, I'm sure, is looking wobbly. Let me get the heat map up on the screen and show you what's happening at the large cap end of the market. So steady. ONGC has been sulking now for a while, ever since the crude price fall started, so shouldn't surprise. There's a bit of a pullback into commodity stocks in the session today. So you see a Hindalco, you see a Tata Steel out here. That is also looking weak. And select IT names, Tech Mahindra, Titan have looked weak. But a lot more green than what it was at the start of the trading day. Leading the charge is HUL, and we'll talk about it. A bit of a surprise really. I don't think too many people anticipated that the ice cream business potential demerger could really bring about such a trigger. I wonder, I'm guessing that's the reason. Shriram Finance on that UBS note, but it looks like, Samina, that select banks and select FMCG names are the ones which are driving the markets higher.
Yeah, in fact, if you looked at the futures and options space as well this morning, it was very clear that Bank Nifty could potentially see a pullback or a recovery. I don't know whether it's just ice cream, but you've also got ITC, so it's FMCG. Exactly what we talked about. It's not about defense, it's about defensives. And that, I think, is the theme on the street. Also with tech, what is standing out for me is the large cap names are getting hit bad. But there are a few. So look at a Wipro, right? Case in point, the stock has not participated in the recent rally. But this afternoon, it's not doing half as bad as the rest of the market. So stocks that have ran up have, of course, come off quite significantly. The ones that haven't participated, for some reason, are remaining or looking insulated for now. That's the IT index. Infi and TCS is slightly flat. The rest of the IT pack is trading much lower. Persistent also not doing too badly. When I say not too badly, it's trading flat. So let's not get ahead of ourselves. But it's not too bad an afternoon in terms of trade. We are largely outperforming our global peers, so that's a huge relief coming in for the trade. But like Niraj said, we don't know how far this recovery rally is going to last. Our markets still look like they're on tender hooks, and we don't have any internal triggers that are going to be driving us. Everything that's happening on the street is going to be largely driven by macro cues. But the markets are positive, and I think for now we'll take heart from that. Bank Nifty as well, seeing a pretty sharp up move, 0.8%, outperforming the benchmark once again this afternoon. Broader market universe is looking a little iffy. The mid-cap index is doing badly, down 0.5%. Small cap and micro cap index taking into the chin, selling off far more than the large cap space this afternoon. In terms of stock movers, a bunch of counters that are moving. Some are very small, but the moves are very large. And I think that's what the market may want to do, is focus on these smaller names, which are driven by news specific action. A couple of counters that caught my attention is Deep Industries. We highlighted this for you in the morning. The stock was one of the top ones to watch out for. The reason being, they bagged a massive order. Now, as compared to the size of this company, it's only about a 700 odd crore market cap company, but the order win has been so huge that the markets got excited. The stock is up 20% in trade. It also comes from ONGC, which I believe will improve the margins for Deep Industries. All that put together, the stock actually looks pretty good in trade. You've got Suzlon. The trigger on this one is that they've completed an acquisition. We don't have too many details of what this is going to mean, but the stock suddenly has slipped into negative territory. The last time I checked, it was trading with a 2 to 2.5% gain in trade. Well, a few more that we have on top of the list is SpiceJet. It seems like they could be coming up with a pretty fair deal with Carlyle Aviation to get them out of the financial mess that they are currently in. The stock is up 4% as we see it. Well, on the selling side, you also on the other gainers that you have are insurance. So anything that's got insurance play to it is looking good ahead of that much anticipated GST meeting outcome. SBI Life, General Insurance, if I can pull that one up, is one counter that's actually looking good. Well, along with that, PSUs are taking it to the chin and continue to do badly. Stocks like Hutco are down 30% from the record highs. PFC this afternoon is also seeing some weakness. Hutco is down another 1.5%. PFC is selling off. You've also got losses in a Raymond Lifestyle, which listed last week. The stock has been hitting lower circuit. Ola Electric, the lock-in period has ended, so 4% of stocks are now liquid to be traded, which means that you will see pressure on the counter. That was the case early this morning. The stock getting bought into another 5% up move on Ola Electric. So it's an interesting market, Niraj. Even though the lock-in for Ola is done, we thought it would open lower, and it did open lower, but the buying's come and the stocks are 5%.
Yeah, it's just very interesting as to what's happened to some of these individual pockets as well. But just the day of strength that we're seeing is what I want to ask Hemen Kapadia of KR Choksi as he joins on the technicals. Aditya Shah of Hercules Advisors joins on the fundamentals as well. Gentlemen, both of you, good afternoon. Thanks for joining in. Hemen, it's turning out to be a bit of a good afternoon on the, I mean, if I look at the charts, because at least for the Nifty, I know the broader markets are correcting, but the index has been well behaved relative to what a Nikkei or some of the other Asian markets were doing.
A very good afternoon to you, Niraj. Thank you for hanging on the show. It's a pleasure. Totally agree with you. It's been a surprisingly pleasant good afternoon. Looking at the Dow Jones on Friday night, one would have thought that we are going to break 24,800 and go down the dumps. But two things. 2,400 has held as of now. I think it looks more of a recovery than a rally. The VIX, which was above 14 on Friday, Niraj, has simmered down to 14.5. US, the VIX has gone to 22, which is obviously dangerous. And the biggest indication of all, if Hindustan Unilever gives a 4-year breakout, Niraj, the market's not going to go up. FMCG defensive, then you have Dabur doing well, then you have Godrej Consumer doing well, Marico looking set for a breakout, Britannia doing. So if succinctly put, FMCG goes up, the market can't go up. So, but yes, as of now, things are fine. 24,800 has held. If 24,800 holds, then 25,100 is the level to get taken out of, which I don't think happens in a jiffy. But yes, I think near term, these are positives. 5,400 is the level to watch out for the Bank Nifty, which has held. So as of now, it's a decent recovery. Let's hope this recovery doesn't get sold into a couple of days down the line. And if today's lows hold for this week, Niraj, that would be a sign of tremendous technical resilience, Niraj.
We also have Aditya Shah joining in with a fundamental view on the markets. Aditya, the lack of local triggers and all eyes on what happens with the Fed rate cut is probably what's making our markets a little nervous and volatile. Are you using the current weakness as an opportunity to tactically add to the portfolio stocks that you've liked?
Definitely, Samina. Good afternoon. We've seen that the US markets are confused a little bit on what will happen on the rate cuts. The rate cuts may not be as strong as previously expected, and that's why the markets are really correcting. Similarly, in the Indian markets, we've seen that the index is holding up. However, the small and the mid caps are correcting down below. And I expect them to correct so that the froth does get a little bit cleared out within the small and the mid cap space. So corrections are opportunities to add. However, you should add in good quality companies within the banking and financial services, within the FMCG space, within the chemical space, within the pharma space. Be very selective and try to add companies where cash flows are really very strong. In a bull market, cash flows do really matter, because those companies where cash flows are not there, they will suffer eventually when there is a correction in the market.
I mean, in this market, I guess there's probably merit in talking stocks only. Anything that you like, anything that you've identified that's making a good, or giving an opportunity to make money? Hemen, any stock ideas from you this afternoon?
Oh, sorry. Yeah. Okay. My bad. I didn't realize it was for me. Yeah. A couple of stocks which look interesting, Samina. The first one is Dabur. Listed history shown we've never sustained above 660 on the monthly chart ever. This is going back 3.5 years. Now we are on the cusp of breaking out from here. So a buy on Dabur. One can buy Dabur at 655. Stop loss 635. Target is 695. It's a very modest target. I believe if it sustains above 660, which up till now it has shown all indications of, we are heading to 800 plus. Second is a buy on Tata Elxsi. High beta, volatile stock. Slightly risky in the sense it's volatile, but yeah, it fell off a cliff from 9,100 to 7,500. Is giving an upward bar reversal today. The correction in terms of time and price has happened in terms of retracement. Now we are setting the stage for a resumption of its up move. One can buy Tata Elxsi at 78.70, stop loss 76.70, target of 92.70. Longer term view would be 5 figures again, Samina.
Okay, well, that's the view on some ideas. It's interesting to see Tata Elxsi do well today. We had a conversation earlier in the day with Tata Tech as well. Samina was in conversation with the MD. So some of these tech names standing out, but I'll tell you what's standing out, unfortunately for the wrong reasons. And that's oil upstream. They have been cracking. On the flip side, an oil upstream company like ONGC giving orders to companies, and those companies seem to be doing okay. So there is a large cap stock, there is a small cap stock, and there is an SME stock. All three have gotten orders from ONGC. Mika brings us those details. Mika, good afternoon.
Good afternoon, Niraj. Yes, ONGC did kind of go on an order allocation spree over the weekend. Over 6,300 crores worth of orders allocated to 3 different companies. First, we have RBM Infracom. Now, the company received an order worth 3,498 crores from ONGC. Now, this has a validity period of 15 years. RBM Infracom is basically an engineering and infrastructure company and has expertise in oil and gas refineries, gas cracker plants, coal power plants, and petchem. We also had Masgao Docks. Now they got an award for 1,486 crores, and this is for a subsea pipeline replacement project that will be executed by Feb 2026. And then we had Deep Industries, which received an LOA of 1,400 crores for the production enhancement operation in the mature fields of ONGC's Rajamundry asset. Now the project duration is of 15 years, but Deep Industries expects this order to be completed in the next 10 years, and this is the company's biggest order till date, and new order doubles their order book to over 2,600 crores. Now, the nature of these orders kind of indicate on how ONGC is kind of enhancing its production. It has seen a decline from its mature fields, and the company has stated that they are implementing different initiatives to bring back some of the oil production in the mature fields back to the entire volume outlook, and as well as, drilling and the new explorations faster.
That's Deep Industries for you. The stock is up 20%, and I think most of its investors would be laughing their way to the bank with that massive order win. So ONGC's brought smiles to a lot of faces this afternoon. In fact, we caught up with Rohan Shah, Group CFO of Deep Industries. He expects the company to pull in 35% growth in FY25 on back of this order win. Listen in.
We are quite bullish on our growth numbers, and we believe we should grow at least more than 35 to 38% even in FY25. And similar amount of growth we are expecting in FY26 and 27 as well. So with an opportunity of adding few more such production enhancement contracts in coming future, this growth percentage can even go for higher.
They've also said that because of this order, their margins are set to improve significantly. Himain, you mentioned Dabur. I'm going to throw in ITC and HUL too to the list of defensive counters that are doing well. Would you consider a long trade on either of those 2 names, or you're happy with just Dabur?
ITC, yes. HUL is firing on all cylinders, Samina. It's a 4-year breakout, Samina, and that is huge. It's a Colossus, it's behemoth, it's a FNO stock. 4-year breakout, raging bull market. 4 years, the stock has not made a new high. It has done that today. So the only hitch or a fly in the ointment, if any, is gone off for 5 months in a row. I know that's not a criteria to hold back your trade, but 5 months in a row is making me slightly uneasy. But yeah, stock looks like going to 3,300 over a period of time. 4 years, the next year or 2 should be positive for the stock. So yes, HUL positive. ITC is the easiest one. Underperformer, catching up, breaking out now above 515. Looks good. Both are worth a trade. ITC safer.
Okay. Well, yes, it's a colossal FMCG name making a big move today, and FMCG by and large seems to be doing okay. But Aditya, I want to just draw that string back a little bit and focus on that oil and gas thing, both from a perspective of ONGC And while everybody was suddenly thinking that oil upstream will be a favorite, I think the month of August, oil upstream got the maximum buy calls, and suddenly crude cracks and the stocks have just gone off completely. And two, just this, there is an SME stock and a small cap stock getting this large order wins from ONGC, really changing the fortunes, wherein one of the companies which spoke to us says that they'll grow at a 35% CAGR for the next 3 years. Any thoughts on some of these beneficiaries within upstream oil exploration and services?
So first of all, there needs to be caution. The companies today are using the exchanges as a disclosure box for order wins. Order wins are great for these companies, but execution matters a lot. You need to monitor how execution happens over a period of next 2 to 3 years. Short-term uptick in the stock price is really okay, but longer-term execution is what really matters. So don't get carried away by order wins. Order wins are part and parcel of life. Execution matters a lot, the first point. Second point is, within the oil and gas space, I have been very vocal in saying that the future right now until EVs really fire up, which will be about 5, 10, 15 years down the line, will be the gas side of it. So somebody like a GAIL, which has done exceptionally well over the last 6 to 12 months, or a IGL or a MGL, is where the juice is, because gas is where the thrust from the government really is. The other space that you need to really look out for is the ethanol space, where the government is trying to give a real push to the ethanol blending to petrol, where companies like Raj Industries are already present, but they will do really well over a period of next 6, 12, 24 months as the government pushes more and more towards all of these kinds of play. Within the upstream companies, I'm not too positive on companies like ONGC, because I feel a lot of the rally has now already been done, and we now need to look at companies in the gas space as well as the blending space, where petrol will get blended with a lot of other products, so that pollution is controlled.
Himain, we anticipated this morning that long OMC could be a trade because crude prices have corrected so significantly. But not sure what's going on. And HPCL, BPCL have taken it to the chin. Upstream, of course, is doing badly. So stocks like ONGC anyway under pressure on back of falling crude prices. Technically, on the charts, do you recommend buying into today's weakness on anticipation of a recovery on any of these names over the next few days?
Samina, if I can extend the time frame that you mentioned over the next few days, over the next few weeks, and if you have the patience and the capacity to wait for a few months or maybe even a year, then yes, I totally agree with you. It does quantify for a buy call, whether it's HPCL, BPCL, or ONGC. But my favorite remains IOC. IOC hasn't done much. It's been an underperformer for quite some time. Mind you, it gives a decent dividend yield, but it's gone nowhere. So over here in a slightly lower level, if you have a 12-month view or maybe 15, I think IOC looks great. We are at around 175. My target is 220, so it could give you decent returns. HPBP are in longer term up moves, but yeah, they've cooled off a bit. And yes, coming back to your main question, on declines, maybe not a few days, but few weeks. They were the buy, including ONGC.
Right. HUL, we talked about that. In fact, Himain gave us a technical view on the stock, but there's also a fundamental reason why this stock is buzzing, and it's all about ice cream, from what we understand. Mahima is standing by with more on that. Mahima, ice cream bringing cheer to HUL.
Absolutely, Samina. So now this is on the back of the news that now HUL has formed an independent panel to evaluate their ice cream business. Now the committee will provide recommendations as to what they will do with the ice cream business going forward. The final decision, how, will be taken by the audit committee, but it will be in consultation with this panel. Now in terms of the ice cream business for HUL, where roughly 3 to 4% of the total revenue is the ice cream business, and at present the overall market share of HUL in the ice cream business business stands at roughly 15%. Now, this is coming after Unilever, which is the parent company of HUL, decided to demerge its ice cream business, and they've given the reasons, saying that the characteristics of ice cream business are unique in terms of supply chain, in terms of seasonal fluctuations, as well as they're more capital intensive in nature. And the panel which formed after Unilever's spin-off so Unilever has decided to spin off this, and it will demerge its global ice cream business by the end of 2025. And the management believes that there is more growth potential, will be better under different ownership structure. And lastly, in terms of viewer perspective, HUL runs 3 brands under the ice cream segment, that is Quality Walls, Cornetto and Magnum.
Okay, well, it's good news for HUL and it's good news for primary markets thus far as well. But 3 companies starting subscription, open for subscription today. Mahima, what's to be watched out for each of these? If you have the subscription details, then share those too.
Absolutely. Niraj, so I'll start with Bajaj Housing Finance, which was one of the most weighted IPOs. Roughly 6,560 crore is the IPO size, and it has already been fully subscribed by 2 p.m. and right now the subscription is 1.26 times. In terms of the price band, it's 66 to 70, and in terms of lot size, it has 214 lot size. So minimum investment for one lot size is roughly 14,980. In terms of key details, second largest housing financer in India. In terms of the GNP and NNPA, it is the lowest amongst large housing financiers, and the outlook, well, the industry is growing at 15% CAGR and is expected to grow at the same rate in the next 3 years, and expected AUM growth of 25 to 30% is what the company is also expecting. Now the next one is Cross Limited, where the Cross Limited has been subscribed so far for 0.61%. It has an IPO size of 500 crores and the price band is 228 to 240. So basically the lot size is 62 and minimum investment here is 14,880. Now in terms of key details, in terms of 2 years CAGR growth, their revenue has grown by 28%, gross profit by 24%, EBITDA by 40% and profit by 54%. Next one is also from the auto space, that is Tollin Tires, and the IPO is for 230 crores and it's been subscribed for 1.26 times now, and the price band is 215 to 226 and the lot size is 66. So here the minimum investment is roughly 14,916. And lastly, PN Gadgil Jewellers will open for subscription tomorrow, where the IPO size is 1,100 crores. The price band is 456 to 480. So here the minimum investment will be 14,880. And in terms of key details, well, it's the second largest organized jewelry player, which is from Maharashtra. And the company will add 12 new stores with the IPO proceeds. And revenue has grown 36% YOY. And EBITDA margins have doubled in FY24 as compared to FY23. So these are the 4 IPOs that will definitely be, on the watch out for this week.
It's going to be a big one. I mean, look at Bajaj Housing Finance. It's part of the Bajaj Group, comes with very solid legacy in that sense, and the stock as well seeing a solid response. You've had about 100 odd anchor investors who've come in, acquired 1,750 crores of worth equity from the likes of Government of Singapore to Abu Dhabi Bank to, of course, Goldman Sachs, Kotak Mahindra, SBI Life, to name a few. Company is growing at a double the rate or run rate of the industry. And remember, with the government's impetus and with the pickup in disposable income, nuclearization of families, it is a story that you cannot, take your eyes off. Of course, you've got to be lucky enough to be able to get an allocation on Bajaj Housing Finance. Here, Aditya, quick question: Have you got a recommendation? Have you got coverage on Bajaj Housing Finance? I mean, it's a story that you want to bet big on if you're playing the India theme.
Definitely. Bajaj Finance is a fantastic company, and what they have built over the last 5-6 years on their Bajaj Housing Finance subsidiary is tremendous. So there's no doubt that one should apply to this IPO. However, the valuations are expensive. It is coming out with a valuation of 3 times price to book. But again, as we've seen with Bajaj Finance as well, the valuation will continue to remain expensive if the company continues to deliver solid growth with NPAs under control. My bigger preference rather than Bajaj Housing Finance would be towards Bajaj Finance, we've seen about 2.5 years of time correction that has happened on Bajaj Finance per se. So that stock also continues to keep looking good to me, which is the part of larger financials per se.
Well, that's the word coming in from Aditya on a couple of housing finance companies. We'll take a break, but while we take that break, it's the 54th GST Council meeting that's underway. Here's a big statement coming in from Uttarakhand's Finance Minister, Prem Chand Agarwal, where he says that the government may cut GST on the helicopter services used by devotees to visit Kedarnath and Badrinath. Listen in.
जो हेलीकॉप्टर सेवा हमारे यहाँ जैसे बद्रीनाथ केदारनाथ या अन्य जो हमारे तीर्थ स्थल हैं या धार्मिक स्थल हैं या हमारे धाम जिनको हम बोलते हैं, उसके ऊपर जो जीएसटी है वो 5% का जो हमारा सुझाव था उसको मान लिया गया है। और उम्मीद कर रहा हूँ कि वो जब नोटिफिकेशन जारी होगा तो हमारे जितने भी श्रद्धालु हैं आने वाले, क्योंकि हमारे यहाँ आप जानते हैं 4 धाम यात्रा में बहुत सारे लोग आते हैं, तो स्वाभाविक रूप से उनको एक इससे लाभ होगा। और हमारा जो मंतव्य है यानी उत्तराखंड का या हमारा माननीय मुख्यमंत्री जी का, वो इसमें आज निर्णय हुआ है।
Back with India market close right here on NDTV profit while banks are doing okay. The real big mover intraday has to be Ola Electric. Look at that. Was down 5%, is up 5% now. 5.18% higher in trade is Ola Electric. So big move out there. Fair degree of buying seen at those lower levels. You know, this is something about, and Puneet will come in and join us, but something about an Ola movement perplexes me. Here's a stock, Samina, that lists at 76 rupees, doesn't do anything for the first half an hour, then suddenly has a series of upper circuits. It's like buyers suddenly decide that, hey, want to buy Ola. Goes up, all the way to 150, then corrects. Suddenly today, down 5%, there is selling, the lock-in
it should have been. That was the right way of reacting to the stock when a lock-in period comes to an end.
Suddenly.
It's almost an afterthought, Niraj.
Exactly.
It's almost an afterthought. You're like, okay, I need an opportunity. Ola is right there. And you're seeing that with a 4% downtick in early minutes of trade to a 5% uptick as we see it. Puneet is standing by with more on this. Puneet, this is a curious case of Ola Electric. From the day it listed to today, it's been teasing investors and traders alike. What's going on?
Well, definitely, so we have the 1 month lock-in ending today. Roughly around 4% is what's come to the market, and roughly around 18 odd crore shares. So it's a sizable amount that's come in the market. We saw the reaction of the stock in the morning down 5%, as you guys rightly mentioned. And this intra-movement of positivity has come, in just the last hour. So it has been, lagging in trade today for good reason because of the big outflow. Now, this is, the first of the anchor book which will come into the play. The second one is going to come on 8th of November when the 3-month lock-in ends. And currently, anchor investors are eligible to sell 50% of their current holdings after the first month ends, which is today. So they will be eligible to sell the rest on 8th of November. But over the next couple of months is when, we'll see the lock-in, come into play after the next 2 months. Now, if you look at, just the company and how it's performed in this particular time frame, the month-on-month sales from July to August has been very disappointing. It's fallen from roughly 41,000 odd sales in July to roughly 27,000 odd sales. And we've covered this in the morning as well. The market share of the company has fallen from 46% in June to 31% in August. And, it's slightly a worrying picture for the company. They have been mentioning that, the 30 to 35% market share is what they expect to maintain for this particular year. But very aggressive launches from the likes of Bajaj Auto as well as TVS Motors, as well as increasing their presence to dealerships, has been one of the key other factors to look at as well. So going forward, certain triggers that we'll be seeing for Ola Electric is, of course, the EV bike segment that they mentioned. We will be seeing some booking numbers around Dussehra as well. That's what they mentioned to the market. Apart from that, they have been testing newer models as well in the E3-wheeler segment, which is very profitable as well. But for now, going forward, we'll be seeing, we have seen already Bajaj launch the cheaper variant of the electric Chetak scooter. Let's see what Ola Electric does with the EV bike segment. That's been one of the key triggers. But for now, stock is reacting positively. The next trigger is going to be the EV bike as well as the lock-in, which expires on 8th of November. Back to you.
Ola Electric. Himain, I know there's not too much historic data on this one. But is there anything that you have on Ola Electric? It's a very recent listing, so I'm mindful of that. But, I mean, as a trader, this is tempting.
Well, yeah, like I said, paucity of data, but a couple of things, Samina. Firstly, it's giving an upward key reversal today. It's taken support on the 55-day exponential moving average. And volumes have shot through the roof. In the last 1 hour itself, volumes are almost 4 crores. So something is happening, and whatever is happening seems to be positive for price action. And a close of a 119 should see a further upside.
You could see further upside. So technically, this one's looking good. Aditya, fundamentally, what is the reason that Ola defies pretty much any sort of news flow and dances to its own tune? At 114, if one doesn't own Ola Electric and wants to add it to their portfolio, could right now be a good time, or you'd wait it out?
So in my opinion, we've seen commentary across the two-wheeler space and the four-wheeler space of a slowdown, especially within the electric vehicle space, where the government is clearly saying that it will not be giving subsidies and the sector needs to sustain itself from here on. And there has been a slowdown in the uptake of the two-wheeler EV bikes and EV cars per se. So my sense is that this stock has become a lot of speculation per se, and a lot of investors are speculating in the stocks, and fundamentals have got detached in the shorter term. in my opinion, the stock is a clear avoid. I would not like to suggest this stock, and I would like retail investors to be really very careful. Rather than this, within the OEM space, if you want to have a exposure to two-wheeler space, you should have a combination of IC engines as well as EV space. So you could look at a TVS Motor, which has got both of these exposures, or you could also look at a Bajaj Auto, where they have got Chetak as well as their IC bikes doing pretty well. So Ola Electric is a clear avoid right now at this stage, and you should look at other OEMs.
That's the word coming in on Ola Electric and other OEMs. A few other stocks that are moving in the market this time around on the downside is these PSU stocks. The PFC today is down 5%. Hudco has seen a big cut from its record highs. Defense names like Cochin Shipyard, Mascao Dogs, Bharat Dynamics, despite order wins, are seeing selling pressure in trade today. And PSU banks are seeing a little bit of recovery, interestingly. Himane SBI fell sharply on Friday. It's not done too much in terms of trade this morning. It's pretty much found a base. That's the feeling I get. Marginally higher in trade. Do you feel like SBI could be a good candidate to play a recovery for the next couple of days?
I think so. A small bounce is in the offing, Samina. I totally agree with you. Okay, it's not much to go on, but we're at 784. Okay, it seems more like 795 and 807. So two possible levels, but yeah, a small bounce seems to be built in, Samina. Yeah.
Okay. Well, stocks which are seeing a bit of a bump up. Vimta Labs should come up on your screen. Also, Karnataka Bank should come up on your screen. Orient Paper has some upticks. So look at those moves there. Karnataka Bank, a sharp spike. Orient Paper has had this very sharp spike, if I'm not wrong, 5.5% higher. In fact, maybe it's cooled off a little bit, but still doing okay. Salzer Electrics is also up in trade. And today's listing has been steady at that 43% uptick mark. So that stock seems to be doing okay too. So question to both of our guests. Actually, Aditya, I don't know if you spoke about the IPOs. We probably didn't speak about today's listing, but Gala Precision Engineering, decent debut on a decent subscription. Did you get a chance to look at this company?
No, Niraj, I have not been able to look at this company, so not be able to comment on it.
Okay, fair call, understandable. But stocks have done well. Sanghi Industries too, by the way, is doing well for itself. So a bit of a spike here into some of those stocks. Keep in mind, Himane, 4 or 5 names that I just highlighted. Sanghi, there is Vimta Labs, there is and a couple of others that have done very well for themselves. Anything that stands out from these stocks? Orient Paper?
Vimta stands out, Niraj, because Vimta has given a breakout from a square formation today after 7 trading sessions. Is the volume matching? Yes, I think volume is matching. So Vimta stands out, looks good, all-time highs, further upside, seems like a distinct possibility. And Sanghi Industries, Niraj, has been down for some 13 weeks. Limited downside, upward bar reversal, positive divergence, indicator supporting. This can be a dark horse. Nothing to lose. Today's low can be a stop loss. Looks like it's giving a decent bounce, Niraj.
Well, that's Vimta Industries. Niraj's find this afternoon. Good volumes, big moves. The stock is trading and has seen a big spike in the last few minutes. Aditya, are you buying into the aviation theme? SpiceJet, of course, announced this morning about financial restructuring plan that it struck with Carlyle Aviation. Fuel prices are also lower right now. I know it's low down season in that sense for aviation or air travel, but opportunistically, how do you feel about some of these counters?
Within the aviation space, Indigo is dominating the space. Indigo has got about 63 to 64% market share, and that has led to a downfall in SpiceJet. SpiceJet is struggling to pay salaries, is struggling to pay the PFQs of employees as well, and that's a real problem. Even though they undergo a massive financial restructuring, the stock is not really cheap at this moment, and the future remains unclear about how the company is going to really move. So even Indigo, for that matter, is really very expensive stock. And I would like investors to stay completely away from these stocks and look at other sectors per se, where there is a whole lot of stability rather than looking at the aviation counters.
Okay, yeah, the 3% higher for SpiceJet. So not a very spicy reaction. And by the way, speaking of reactions which are not that great, Suzlon, it secured India's largest wind energy order. The stock was down about 0.5%. We spoke to CEO JP Chalsani about the order win and how it aids the company. Listen in.
This is 370 megawatts, 370 turbines of 3.15 megawatt each. And the 3 different projects all in Gujarat to be completed. And these projects need to be commissioned from December 25 to February 26. Means the whole thing is to be commissioned by next financial year. So therefore, obviously, the supplies would start this year for this project. And as you were mentioning earlier, the 3 projects. And this has not just the supply contract, it also has the foundation direction contract, plus it also has a 10-year OMS service contract. And the service contract starts immediately after commissioning, unlike other places where we have a 2-year warranty period and there's a free OMS starts after that. But in this case, this service revenue starts right from day one. So there are 3 contracts: the supply contract, the BOP contract. BOP includes the foundation direction, and the third one is the OMS contract. So the revenues would start going from this year itself because supplies would commence immediately. And the added advantage here is that the NTPC went ahead and awarded the land acquisition, 33 kV, other BOP much in advance to other contractors. So these sites are much better prepared for us to move ahead and do the foundations quickly and supply and direct. I think that's the advantage that we expect these projects would be commissioned on or ahead of schedule.
That's the management of Suzlon, talking to us exclusively about what that big order wins means for the company. This one's been a hot favorite all through July, August, and of course now you're seeing a little bit of weakness in the stock, but it's largely been quite a bet post its earnings reporting a few weeks ago. Well, a quick check where it's going into the last 15 minutes of trade. The markets have spent most of the day consolidating with a very clear positive bias despite very weak global cues. So the handover from Asia was weak. I'm not sure how Europe has opened up, but it's not done too badly in terms of trade. And that's the Nifty picture for you. Nifty futures are trading in a premium. There's an increase in open interest up to about 1.5%, very clearly indicating that long positions are being undertaken on the index itself. Europe is off, started the week off on a positive note. Remember, there's the ECB meet this week, and a rate cut is expected from the European Central Bank, and that could be stemming a little bit of a gain across those European markets. So while Asia was weak, Europe's doing okay, and our markets also consolidating very clearly with a positive bias. Bank Nifty, though, has turned around from what we had this morning. While there is an increase in the Nifty, the Bank Nifty futures are trading in a premium, there is a decrease in OI. So clearly, once again, it seems like the further movement on the index could be capped. And that's what Bank Nifty is looking like. But the Nifty itself setting out a fairly positive picture as we see it. Himain, we're going into the last couple of minutes of trade. The PSC index is down 2%. Broader markets are underperforming today. Very similar to the trend that we saw in the early part of last week as well. In the last couple of minutes, any opportunities, any buy today, sell tomorrow, or even sell today, buy tomorrow for our viewers?
Well, the way the markets are placed, Samina, I think is more of a buy today, sell tomorrow. And I have a bunch of them actually. SRF, Apollo Tyres, and HDFC Bank all are qualifying for a VTSC trade, Samina, because I believe the Nifty should go to 25,100. Sorry, should go to 25,000 tomorrow. So all these should bounce.
Aditya, what about you? Have you, constructive on anything? There are opportunities, and it's very obvious, right? If you look hard, you will find something. Anything that you found that you'd like to recommend?
Definitely. So today, since we were talking about the Bajaj Housing Finance IPO, my topic right now at this stage over the last 1 month has been Bajaj Finance. We're seeing a 25 to 30% credit growth that Bajaj Finance is really taking up. And with the new apps that are going to come up, they will do pretty well over the period of next 3 to 5 years. We've seen the stock derating as well over the last 2 to 3 years, where it has practically done nothing, and it has been at this level of 7,200, 300 over the last 3 years per se now. So the large cap financials, they will continue to keep doing well. Bajaj Finance is one of those counters where they will do pretty well. Another space that I find very interesting is the chemical space. I've been recommending that sort of a contra pick, where we've seen companies like Deepak Nitrite, companies like Gujarat Fluorochem now do exceptionally well over the last 1.5 months. Stocks have risen. The business performance will come by the second half of this year, and people need to be really very careful. Chemicals is a heterogeneous space, so you need to define your entry and exits that way. So two spaces look very interesting, the large cap financials as well as the chemical space.
Okay. Well, I think a chemical name that's done really well has to be Gujarat Fluoro. Some really sharp moves the whole of last week, especially Thursday and Friday. And I think in today's session too, it's marginally in the green. Actually, not marginally, sorry. 5% higher, $4,000 and counting for Gujarat Fluorochem. This is some serious uptick in this stock. Himen, I mean, $1,000 in a matter of 3 days. Don't leave much to the imagination of the strength of the counter. The question is what to do now. So I'll make it difficult for you, Himen. I'm not going to ask you, can somebody buy it now? Because I know your answer will be that it's difficult. So I'm going to ask you that somebody has the stock. Should that somebody book the profit here?
15% booking, otherwise not more. 4,200 all-time high. Stock's going to 5,000, Niraj.
Oh, in which case, let me then ask what I thought was a difficult question. Would you buy it right now if you believe the targets are 5,000?
Yeah, I'd buy half now. Volatile markets and the way it's moved makes it probably susceptible to some cool off profit booking. So yeah, I'd buy half now. Assuming it comes back to sub 3,800, I'll willingly add more.
Yeah, I mean, what's happening? You track chemicals very closely, amongst other things. I know that they are trying to do some battery chemicals as well. Probably some fundraising in one of the subsidiaries is the other rumor. Any idea about what could cause such a sharp up move?
So what is happening is the prices of fluorochemicals, some of the fluorochemicals that are used in refrigerants and also on EV chemicals are starting to recover. And it was about time that Gujarat Fluorochem, which is specifically present within the PTFE space, they are going to benefit as the prices continue to keep moving up. We've seen a sharp erosion in margins for Gujarat Fluorochem from about 40% to 30% over the last 1.5 years, and that will start to recover. So I'm not at all surprised by this rally. And as Himen also said, I don't see that why the stock price should not move to 5,000 by the end of this year.
That's the word coming in a couple of those chemical names. It seems like that rally is back. Even in Archeon, in fact, has been doing quite well. It is an expensive stock, and you can't argue that. But of course, today the count is down 3%, but it's had a good run year to date at least. Niraj caught up with Mihir Vora, CIO of Trust Mutual Fund, and shared his views on the IT sector and how the fund house has reduced its underweight position on the sector. Listen in.
So that's more of asset allocation based on the profit booking that we did in some of the sectors that I mentioned. So, for example, while we continue to be very positive on defense, infrastructure, manufacturing, etc., we had a huge exposure to that segment, which we have trimmed dramatically. We almost had 20+% exposure, which we have in the last couple of months trimmed down to about 10%. So that the reallocation of that 10-12% that we do, some of it obviously went to IT, where we were significantly underweight. So you can say we're not like very positive on IT, but we've significantly reduced the underweight position that we had.
Okay, but you're not too constructive on IT. This is just a reduction. Okay, what about? And before I come to pharma, what about within IT pack, Mihir? IT services, ER&D, and we have some of the tech plays which are more domestic focused, and we've seen the kind of gains that the Zomato, PB Fintech, now even a Paytm is reviving, etc. And then there's some of the others too. Within this bucket, and I'm presuming that even the domestic tech plays form a part of this 9%, correct me if I'm wrong again, where is it that you're more constructive on within these buckets?
So I don't really treat these new business model companies as IT per se, because they are more consumer companies in my view, because they face the consumer and use technology, of course, to reach the consumer. But for me, they are more of consumer companies. So we are very constructive. That's one of the things that we are definitely playing on this new business models. So that's a definite plus for us, yes for us, overweight. Within IT services, I would say it's a stock pickers market, but in general, if I were to look at the top 4-5 companies, we are talking about at best single-digit kind of growth. My view on the large companies is large IT services companies is that we will revert back to pre-2019 growth rates, which is again single digits for the medium term. The spike that we saw because of COVID spending on IT by US corporates is past us. So on that base, I don't think they've not. Let's face it, they've not tweaked the business models dramatically to give us the confidence that they are going to grow faster than what they did in the past. So to that extent, it will be a good, predictable, medium growth, medium expectations kind of sector. But if you expect the Indian economy to outperform the rest of the world, then you probably don't want to be very overweight on the large IT companies. In the mid and small cap IT space, IT services space, there are companies which have different target segments, as you mentioned, ER&D. There are companies which focus more on BFSI. So my guess is that you might see some more attraction on the BFSI spending space in the US after a long time. AI probably will give some opportunities for some of those companies. So I would say that IT will more for us be a stock pickers market, where we would like to pick stocks in the mid-cap space rather than go very over on the large IT companies.
That's, of course, Mir Vora and his IT view. Himen, do you concur with what he says? Technically, any IT stocks that you like right now? Of course, we've talked about Tata Elxsi, we've talked about Tata Tech. What about a Wipro? What about a Persistent? What about an Infy? TCS, LTI? They've had good days in the last few weeks.
Well, most of the stocks you mentioned are looking good, Samina, whether it's TCS or LTI. But some of them have had a significant run up. So I would be more comfortable buying them on slightly lower levels. Now, TCS in the whole move, technically speaking, Samina, from 3,600 to 4,570. This is a whole technical move I'm capturing accounting to a certain theory. So we are at 4,450. I would be comfortable buying it at 42.50. So currently it's neither here nor there. If I look at the long-term charts, yes, Persistent is the strongest of the IT stocks. Samina, it normally is post the new high or moves faster. So yes, LTIM is another stock which looks interesting. But TCS on a lower level and the other stocks only on a correction, Samina.
Aditya, what IT stocks are you adding to your portfolio right now? Are you adding IT to your portfolio? I think that's a more pertinent question.
So we are already overweight IT. So we have companies like L&T Technology Services or L&T Infotech, Mindtree. We've seen Tata Elxsi also give a move of about 20-25% over the last 1 month. So my view on IT is positive. However, you will need to wait until the second half of next year now to get a good business growth per se from these companies. So longer term, we are positive on all of these companies. However, shorter term, there could be some pain on all of these companies.
Okay. What else is moving? I think just trying to see stocks which have had a move where, DCW had this smart investor coming in a block deal, I think on Thursday. That stock is up 7.5%. So watch out for that one too in trade. We've got on the BTST for sure. Aditya, just before we let you go, anything where the commentary of a company in the recent times has stood out for you, either positively or maybe even negatively?
As I said, I was listening to a con call from RACL GearTech where.
Sorry, I'm losing you, Aditya. Sorry, what business was this?
So that was RACL GearTech. That's a small cap company listed on BSE that supplies gears to auto OEMs across Europe and US. And a pertinent thing that they told us is that there's a massive slowdown on the EV space that is happening across Europe and US. And companies like Mercedes, BMW are stopping their investments across EVs because there's particularly no demand per se, and they are only doing some incremental capacity utilization within their existing capacities. So one of the interesting things that we have learned that the hype around EVs is starting to teeter down, not only in Europe, not only in US, but also in India. And slow and steady investments in EVs is what we will get over the period of next 5, 7, 10 years. And the technology needs to get far more developed. So right now, companies with a combination of ICE engine as well as EV are the companies to watch out for. As I said, within India as well, somebody like TVS Motors or somebody like a Bajaj Auto, they will do exceptionally well over a period of next 5, 7, 10 years. However, this is a short-term commentary that we have heard, and it is really very surprising that larger OEMs such as Mercedes, BMW are slowing down their investments in EVs.
There's no keeping the bull down for too long, and this is the resilience of the market today. And I think, Niraj, you mentioned this in the morning, right? Any sort of correction, as small as it is, gets bought into, and today is a clear sign of that. Of course, fortunately, Europe has supported us, and that market has opened higher. And there's a bit of a rub-off effect that our markets are witnessing on back of it. But for whatever it's worth, it's looking nice, it's looking healthy, it's consolidating with a positive bias. And the fact remains that the broader markets have also seen an uptick, even though they were trading slightly worse off as compared to the benchmark. Bank Nifty, that's been a bit of a trouble spot for us, has also done okay. IT is seeing a little bit of mixed trade. The breadth of the market is good, and I think that's what we're taking heart from, right? It's not sporadic gains coming in. It's the sectors are moving up. Bank is contributing. PSU, of course, is still under pressure. But largely speaking, we're leading from the front once again this afternoon.
Yeah, the only I mean, just that the small cap number is looking weak. By the way, something that just before we start wrapping up, I don't know, I'm just seeing this news effectively because of the X handle of Aditya. There are apparently credit card transactions. I have no idea if this is true or not. Below 2,000 rupees will attract 18% GST. I wonder if this is true. But just before we wrap up, Aditya, quickly come in on this. I mean, is this true? And this is a big negative then for credit card companies, I mean, banks or SBI cards.
Yeah, so Niraj, today, as you know, there's a GST Council meeting that is going on. And on the agenda, there was that there could be a GST on transactions below 2,000 rupees. So we need to go back and decipher in 2016 to inculcate and to encourage card-based transactions. The government had cut back on this service tax as it was back then. Now the GST Council, it seems, has agreed that this should be put back on, and this could essentially be negative for companies like SBI cards, for companies like HDFC who have huge credit cards, and they will not be able to bear this cost, and this will have to be directly passed on to the consumers, which indirectly would mean good for UPI. People will start to use UPI and less of credit card for transactions below 2,000.
Right. Aditya, Himain, thank you, gentlemen, for joining us this afternoon. Great to get some perspective from you on the charts and, of course, fundamentally as well. It's a good-looking Monday, Niraj. It's such a relief, and it's so heartening to see that the bulls have fought their way and we're ending the day on a positive note.
Yeah, most certainly. As Samina said, maybe we could have hoped for slightly better action from the mid-cap, the small-cap end of the market, but 1/3% on the Nifty is nothing to scoff at, with banks leading the charge really today. Something that she spoke about in the morning, Bank Nifty doing really well, led by private banks, mind you. It's not PSUs, but private banks certainly have done well. ICICI Bank leading the way, and the heat map will come up on your screen. It'll just show you ICICI Bank and a few others are the ones which have really done well and leading the markets higher. I know the markets are shutting, but let's just get this is the close, but let's just get the heat map up on the screen for a moment, and you will see this. ICICI Bank up 2%, there is Axis up about 1% as well. HDFC Bank about 0.5%. So it's private banks which have done well. But beyond that, HUL, Shriram Finance, ITC, so FMCG has participated in a big way today. ITC, Britannia, Tata Consumer, HUL looking so solid. Coincidentally, it seems like a day wherein we can tell you that we told you so, because this morning on the trade setup we spoke about how consumption seems to be the bucket. The thing that has surprised most people is OMC behavior. Those stocks aren't quite doing well. But Samina, mid cap, small caps, maybe you wanted a bit more.
Don't complain, Niraj. Last week, the broader markets did better than the benchmark. The mid cap and the small cap index went home flat. Nifty was down nearly 2%. So I think we should cheer the move today. It's not a bad market. It's consolidated. It's been healthy. It's been broad-based, and it's come on back of good breadth. So I think that's what you want to take a little bit of heart from, right? Pockets of interest remain. Pharma continues to be a sector to bet on. FMCG, like we said, is a sector you like. Defense counters, we said you must avoid, and that's really how the trade has played out. Despite a Mazagon Dock bagging a significant order, that sector did not participate today. Metals also doing quite badly. PSU is what worries me a little bit, but generally speaking, FMCG has done well. Banks, like Niraj said, we told you so, did well in trade. Private banks led from the front. You also had a couple of those other gainers and losers where your consumer durables doing okay. On the sell side, oil and gas had a fall. India VIX cooled off quite well. So I think that's another thing that we should take heart from. A 6% fall would be rather comforting for a whole lot of traders in terms of today's session. Among stock-specific trades was largely on back of order wins. So you had small names like Deep Industries that did quite well. Ola Electric, not small, but did quite a U-turn in today's session. You also had pharma counters in the broader market universe that actually saw some buying emerging. A couple of stocks in the IT pack managed to hold off together. But all in all, a relatively happy Monday.
Yep. And on that happy note from Samina and me.
Niraj is missing Tamanna.
Thanks so much for tuning in. Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The case for a chat for our guest today is banking on financials the right bet under the current context? Is IT in for a bit of a turnaround? Because his bets seem to suggest that they are bracing for some bit of an uptick in IT relative outperformance relative to the past. Have aerospace and defense and some of the sectors which have run so well in the recent past finally run their course, or could there be more? And of course, because he looks at macro with as much keenness as micro, we cannot let Mihir Vora go, or we cannot start a conversation with Mihir Vora without talking about the global macro. He joins in on the show today. Mihir, thanks so much for joining in. I was really hoping that we do it in person, but maybe some other time. I understand you had to go to your office today, but yeah, some other time in person from our studios. But thank you for taking the time out, Mihir. And just such a perfect day to get you. We've seen the non-farm payroll data come out. And the interesting thing is that maybe earlier the market wanted weak data to lead to some heavy central banking action for the markets to do well. Now the market seems to be worrying that yes, there will be central banking action, but growth seems to be a problem, and therefore there is a worry out there too. How do you look at this curious set of events?
Good morning, Niraj. Thanks for having me. Always a pleasure to be on your show. So market always wants Goldilocks, right? But you may not get Goldilocks all the time. So market wants the US economy to slow down just enough so that there is a justification for rate cuts, but not too much that it goes into a recession or something like that. So that's something that is wishful thinking. My base case is that the US continues to slow down because if you look at the overall macro picture in the US, the excess savings of the households has actually been depleted. The excess savings that we saw because of the COVID stimulus, that is depleted. So you can't continue to expect the same kind of traction in retail sales, services, etc. that we have seen in the last 2-3 years. And the farm rolls data and the other data points in the last few days that we have seen, especially on the job creation side, there is a distinct sign of slowdown. So I think my base case is that the US continues to slow down as far as the retail consumption, etc. is concerned. So you may see some downgrades on that space. On the flip side, that may not immediately lead to technology spending because corporates have still made a lot of money. You are seeing earnings resilience in the tech sector, at least so far. So you may not see the immediate impact for Indian IT services. But for the global economy, as far as commodities are concerned, as far as general goods and services trade is concerned, you can see some slowdown.
Got it. Okay. So, Mihir, there is a slew of central banking decisions. I think we have ECB this week, and the Fed may be following some of the European central banks. Based on your base case of the US continuing to slow down, but we're also looking at Fed action, even if it's just 25 bips or 25 basis points in the current policy, but maybe some more in the times to come. What is your stance on risk assets in general? We'll come to India valuation specifically, but I remember you telling me that central banks have been the driving force behind market moves ever since COVID lows. Does that continue to be the case, or would you be skeptical on risk assets?
I would be a little circumspect, but not necessarily for, say, flows to emerging markets, because what the banks are trying to do is make sure that the dollar does not appreciate too much or depreciate too much. But if the pace of rate cuts in the US is faster than the rest of the world, then you might see a gradual depreciation of the dollar against the major currencies, which can lead to a little bit of positivity for the risk assets. But my observation over the years is that ultimately it's growth that matters. And if the rate cuts are happening in a slowdown cycle, then it does not necessarily have a salutary impact on risk flows. I think the fundamental requirement is growth, and if growth is slowing down, then you can see some volatility and some uncertainty for sure.
Got it. Now, just trying to figure out what happens sectorially, and I'll come to individual themes or individual ideas in a bit, because I see some of the changes that you presumably have made to your portfolios too. So I would have some questions there. But before that, is it a turn for some of the lesser performing names which are trading at better valuations to make a bit of a comeback cyclically, and for some of the ones which have done really well in the last 12 to 18 months to take a bit of a breather or maybe even correct? Could there be a barbell strategy of sorts?
So I think the base thesis and the themes would remain the same. We've discussed this in the past, that we are more bullish on the domestic economy compared to the rest of the world. So that base case remains. Within that, we are still of the view that the financialization of savings and premium consumption will structurally continue to do better. And physical asset creation, which includes infrastructure, manufacturing, real estate, will continue to be the focus area for the markets. The other one is, of course, that new business models will continue to get evolved. We'll see a lot more companies with these new age, new tech companies, which will be an interesting space to watch out for. So these 3-4 themes, I think nothing has changed in the last 4-5 months. That for us, that remains. Within that, what has happened is that while, say, 1 year ago, 2 years ago, some of the manufacturing themes, defense, etc., even railways themes were relatively unknown and under-owned in the institutional portfolios. So, of course, they had a dream run. We saw many multi-baggers in that space. But now I think we probably overshot a little bit, and typically when you have too many thematic funds in a particular segment coming in, it means that the sector is now well discovered. So to that extent, in the last 4-5 months, we have seen a slew of funds in this physical asset creation space, manufacturing, defense, etc. And stocks, of course, did run up and make a peak. So I think for the time being, while we are very, very bullish on these segments in the medium term for 3 to 5 year view, probably stocks had overshot and there's a bit of a correction. So in the last couple of months, we have reduced allocation purely based on valuations. I don't see too much of a threat to earnings. But purely because of valuations overshoot, we have reduced space in some of these segments. Over the last 2-3 months, what has also happened is that we are incrementally seeing some positive commentary from the companies which deal in the rural markets. So it's not like all gangbusters and things doing very well. But if you look at some of the data points like apparel consumption in tier 2, tier 3, tier 4 towns, commentary from some of the FMCG companies, there is a feeling that probably the worst of the slowdown in the rural consumption is probably past us, and on a good base with a good monsoon, we should start seeing some pickup. So rural consumption was something that we were negative on, but probably we are getting incrementally more positive, and we've kind of added a little bit of exposure in this theme. So that's one thing to look for. I think rural versus urban consumption-wise, rural incrementally may do a bit better. Urban still is a mixed bag. Cars are not doing that well. Rural two-wheelers, which are rural play, are doing well. So I think rural versus urban, rural is beginning to look a little bit better. The other big one actually is financials, where we do see a theme where the market is expecting rate cuts. But the impact of rate cuts will not be uniform in the short term. So to that extent, the markets are kind of rewarding lenders which have a predominantly fixed rate book, and that happens to be typically the NBFCs. So within lenders and non-lenders, so on lenders we have banks and NBFCs. Non-lenders we have a host of companies in the capital markets, insurance, wealth management, broking, asset management space. So that's the non-lenders. So we are more positive on non-lenders to start with because it fits in with the financialization of savings theme for us. So we have more bullish there. And within lenders, within bank and NBFCs, at least for the medium term, not medium term, I would say short term, we are a little more positive on the NBFCs because a lot of the NBFCs have a fixed rate book. And when interest rates come, the liabilities will get repriced downwards and immediately. Assets will take a little bit of time. For the banks, most of the book is floating rate. So the assets will get repriced faster. So you might see a little bit of compression for the short term for banks. So tactically, I would be more positive on the NBFCs within the lending space.
Okay. So, well, viewers, that's the whole gamut of things. I want to start off, though. I'll talk about defense in a bit. I want to start off with the global-facing sectors, IT, and to an extent, pharma. Now, I heard you say that you believe more in the domestic themes and less on the global-facing themes. But I do see, and correct me if I'm wrong, but relative to June, in July, your exposure to IT has increased from what, sub 6% to maybe around 9%. Is that true? And if so, why is that a bet when you are more focused or more constructive on domestic?
Sure. So that's more of asset allocation based on the profit booking that we did in some of the cyclicals that I mentioned. So, for example, while we continue to be very positive on defense, infrastructure, manufacturing, etc., we had a huge exposure to that segment, which we have trimmed dramatically. We almost had 20+% exposure, which we have in the last couple of months trimmed down to about 10%. So that the reallocation of that 10-12% that we do, some of it obviously went to IT, where we are significantly underweight. So you can say we're not like very positive on IT, but we've significantly reduced the underweight position that we had.
Okay, but you're not too constructive on IT. This is just a reduction. Okay, what about? And before I come to pharma, what about within IT pack, Mihir? IT services, ER&D, and we have some of the tech plays which are more domestic focused, and we've seen the kind of gains that the Zomato, PB Fintech, now even a Paytm is reviving, etc. And then there's some of the others too. Within this bucket, and I'm presuming that even the domestic tech plays form a part of this 9%. Correct me if I'm wrong again. Where is it that you are more constructive on within these buckets?
So I don't really treat these new business model companies as IT per se, because they are more consumer companies in my view, because they face the consumer and use technology, of course, to reach the consumer. But for me, they are more of consumer companies. So we are very constructive. That's one of the things that we are definitely playing on, this new business models. So that's a definite plus for us, yes for us, overweight. Within IT services, I would say it's a stock pickers market, but in general, if I were to look at the top 4-5 companies, we are talking about at best single-digit kind of growth. My view on the large companies large IT services companies is that we will revert back to pre-2019 growth rates, which is again single digits for the medium term. The spike that we saw because of COVID spending on IT by US corporates is past us. So on that base, I don't think let's face it, they've not tweaked the business models dramatically to give us the confidence that they are going to grow faster than what they did in the past. So to that extent, it will be a good, predictable, medium growth, medium expectations kind of sector. But if you expect the Indian economy to outperform the rest of the world, then you probably don't want to be very overweight on the large IT companies. In the mid and small cap IT space, IT services space, there are companies which have different target segments, as you mentioned, ER&D. There are companies which focus more on BFSI. So my guess is that you might see some more attraction on the BFSI spending space in the US after a long time. AI probably will give some opportunities for some of those companies. So I would say that IT will more for us be a stock pickers market, where we would like to pick stocks in the mid-cap space rather than go very over on the large IT companies.
Got it. Now, pharma is in focus. Before I go to Mihir on his thoughts on pharmaceuticals, there are some news announcements that have come in today. It would be good to get in my colleague Varsha to give us a lowdown of what have been the latest developments and what are the stocks that are moving as a result of that. Varsha, good morning.
Good morning, Niraj. So, few of the pharma stocks are actually under pressure. Now, let's start with Lupin, wherein Lupin is facing a legal challenge related to its generic version of the drug, which is used to treat kidney problems. Now, the original maker of this drug, which is Otsuka, is challenging a recent court verdict that favored Lupin's generic version of the drug. And Lupin was expected to launch this product in April 2025. However, this new appeal introduces uncertainty whether Lupin will be able to launch this product or not. Now, the primary product for the innovator is contributing almost $1.5 billion of revenue for the company. So that's the market that Lupin was actually targeting. Let's see what Citi has to say. So Citi has a sell rating for the stock with a target price of 1700, implying almost 24% of the downside. Now, Citi says that Lupin may choose to delay the launch of this generic drug, and the company may not capture as much as market compared to a typical launch that was expected. And this will actually impact significantly to the Lupin's financial numbers, as Citi was expecting a 30% contribution from this product in FY26. And then we have Granules India, wherein they've got 6 observations from US FDA for their Hyderabad plant. The inspection was from August 26 to September 6, and this facility is actually crucial for Granules and contributes. So major contribution comes from this facility and is crucial for manufacturing finished doses and the intermediate products, and it also supports global operation for the company. We don't have the revenue contribution, but we do have the capacity. It has a capacity of almost 23,200 tons for intermediates and 26 billion units for their finished doses. Then we have Suven Pharmaceuticals, wherein US FDA conducted inspection for their subsidiary plant, and which was categorized as VAI, that is voluntary action indicated. That means that US FDA has found some lapses, but those were not severe enough to take any kind of action, and the company is therefore expected to take the voluntary actions for these regulatory approvals.
Thanks a lot for that, Varsha. Mihir, pharmaceuticals, the price action seems to suggest that there is a bit of flow into some of the specific pockets. But the US generic makers have already had a rally in 2023 too. Are you constructive here, or are you part constructive? Would love to know.
Pharmaceuticals, we are constructive now compared to say 4 months ago. Couple of things. Structurally, the sector did go through its ups and downs in the last 4-5 years. But I think the worst of the generic pricing pressures are most likely past us. So that's one good thing for the generics company. But I think post-COVID, what has also happened is that a lot of companies are now looking for the CDMO opportunity for India, the CRO opportunity for India, because like it or not, people have realized that we need to, for the sake of security, diversify away from China. And China is really big on CDMO. So I think apart from the generic opportunity, the CDMO opportunities have also opened up for Indian pharma companies. And that's the reason why we do think that in the next 3 to 5 years, this sector should do quite well. The good thing about the sector is that you also have companies with a predominantly domestic exposure. So there's a wide basket to choose from. You can choose companies which are more like FMCG companies because they do the local markets. You can choose the generic companies, or you can choose companies which are in the research and CDMO space. So there's a whole gamut of companies to choose from, which makes it a interesting sector.
Okay, and watch out. So again, because it may be a very